Most of the talk here on the grains will be on corn here. That's the highlight and exciting stuff. We also have some good things to talk about here. As far as the what's going on right now, obviously harvest is a key issue here. Right now we're looking at above normal temps for the central and southern corn belt, so we should get some pretty good harvest advancement here coming up over this next week to 10 days. As far as the precip wise, for the most part, yes, you do have little areas here showing below normal precip, so that should help out a little bit here for these guys as well. So bottom line for harvest is expected to go pretty well here over the next week to 10 days. As of last Sunday, so this is Sunday of last week, we were 6% harvested. That's about 2% higher than the 5-year average. As of this report coming up, as of this afternoon, for this past Sunday, just yesterday, they're talking about 12 to 15%. So they're going from 6 to 12 to 15. So keep in mind, as far as harvest goes, we'll get more results on this end, get market kind of focused on the harvest issue, and maybe also on some of these better yields that we're starting to talk about here. Kind of last week we had a chart like this, looked kind of confusing, but it was a pretty neat message once we explained it. I know it's going from the August to September change in yield. Here's one showing the September to January yields, what usually happens. And here's past 20 years of history, and 14 of those 20 years, the white bar is going up. These are the changes in percent in yields. So 14 of the past 20 years, we do have an increase in yields. So keep that in mind. In terms of numbers, what it can mean, look at this thing here. The lowest one right here, as far as the lowest gain, is 164.2. Keep in mind, USDA last month is right here, this middle ground, 162.5. On the other hand, you do have 6 years of some lower yields posted here. A couple of these are kind of these extraordinary years, 93 and also 95. There is a chance we can have a slight drop, and we have some people still suggesting that could happen. At this point, we're still going to stay with our 162.3, which is right next to USDA's 162.5. As far as another issue here, we've got to respect the fact that we do have funds. Here's the managed futures, or the managed futures. These are the trading funds who go long and short. They are record long right now. And this is probably the largest gain in, what is this, 1, 2, maybe 3 or 4 weeks in history for these guys. That shows the extent of what's going on, as we all know by the way this market's acted. Yeah, that's right, Brian. Brian says it's consolidated for about a day. It's certainly true. So one of the biggest straight-up moves I think we've ever had on these fund issues. And like I said, this is record long for the managed funds. Well, one thing we talked about here is, well, what can we do as far as prices? We said we're looking for a minimum upside target of $4.80 for December futures if we get that 162.3. As we see from today in news wires, the market is not feeling that we're going to stop right here at this 162.5 area for USDA. The market suggests we're going a little lower here. And if we do see a 160 and 158 levels, we do have 520 and 560 for upside targets for these December futures. So keep in mind, this is what the market is trading right now, these higher targets right now. One thing we kind of talked about is the market saying, well, we've got the tightest stocks to use right now since 1995/6. That's actually not completely true. That's kind of a way of kind of clouding the issue here. What I've done is showing stocks to use by month since 2008. And I started with May of 2008, so the very first of those new crop reports we get went through April right here, and then with the 2009 number here, that's actually the May of 2009, the new crop. So starting from new crop to new crop. One thing I want to point out here is we do have this number back down here, this dramatic drop in stocks to use, but this does go back to the lowest since October here of 98. And that's the year where we saw this. During that month, you saw futures trade on the high end of 501, down the low end of about, I believe that was 376 or so. Just closing prices just above $4, if you remember right here. So we were here just a couple years ago. And in terms of prices, once we saw these stocks to use numbers drop a little further, yes, we were looking at prices up a little here. And of course, if you look at a $6 mark all the way over here, you're looking at a stocks to use, which actually isn't too much tighter from here. We're running at 8.3 right now, maybe down to about a 7 is what this number here. So bottom line is, this is not as dramatic and exciting as what the trade's kind of playing out to be. It's not the tightest stock since 95/6. It's actually the tightest since October of 2008. In terms of, let's get into the action plans right now. Well, one of the things we talk about was what do we do with this market right now? How about we sell cash? Because Nobody wants to hold this stuff right now as far as holding short futures or whatnot. How about we just convert things and sell the cash? Here's one of the problems we have with selling the cash is in terms of basis. The difference between cash and futures, this is historically at the worst time at all of the year to sell cash outright. Keep this in mind here. We've got to think of some different plans to work on. We're working on some of these types of sales here. As of right now, the very first month we have for this year, for September, obviously this one's a little wider than normal, and normal is this line. So if we're going to talk about selling the cash, usually we don't do it maybe after harvest. You can get a couple of bumps. This is January, here's the February one. It's usually the best time to sell cash outright. So keep that in mind here. Going back to this one here, as far as some action plans, let's just quickly discuss what to do with this corn. This morning put out an alert. We're moving the rest of that 2009 corn crop, and we only had 10% that was left unsold as far as a company recommendation. We're selling it not because we think prices have peaked, but because it's time to move. Just we got harvest coming right now. So simply to move product is all we're doing to get rid of this old crop. Another action plan we're talking about right now. Currently for new crop, we're 75% covered. 50% of that right now is actually one of those old three-ways where we had a $4 base put and some other options around it. Now we're recommending to get out of that three-way position and move up into March three-way position, moving up to a 480 base put. What does this mean as far as that net position? On that first one, we spent 22 cents to get that original three-way done. Right now it's actually minus 21 or minus 22 cents. So we're actually going to take about a 44-cent loss on that initial three-way put, which established that four-way bottom. However, futures rallied 94 cents during that time. So producers doing this original strategy have actually gained over half the market rally doing this type of three-way put. It's kind of confusing to keep in mind, but we just make that point. Market rallied 94 cents. Producers are getting 50 of that back in their pocket through the cash position. So keep that in mind here as we talk about things like that. So that's the only thing we have going on here with corn. As far as the soybean side, I'm not going to spend a whole lot of time, just point out what we already know. Right now, funds are at a pretty high level as far as their net long position. Nothing new as far as this move here, this latest week's number. As far as on the soybean side, right now we're 75% covered on new crop. We're now going to put out, as of this afternoon, recommendation to get the remaining 25% sold. So while with corn, we're still only going to be 75% total. For beans, now we're getting 100% complete locked up on the soybeans. Or we can make a bullish argument for corn, you cannot do that for beans. So as far as beans, the last 25%, we're going to sell that using a $10 put for a base, selling a $9 put on the low end, and also selling a $12 call on the high end. So with that in mind, we're getting the last 25% of new crop locked up, and we're using $12 on the high end. So we can get a rally all the way up to there before we have to worry about things here. As far as the wheat, this is the KC contract. This one looks more exciting than the Chicago. Same type of story with that corn. Look at that dramatic rise in this net long position. And this is still record long here for the wheat guys as well.